Hello everyone, welcome to the new class. Today we are going to discuss a new topic which is an extension to the special journals or day books. We were talking about special journals or day book as a chapter of Accountancy of 11th standard where it is mentioned as transactions, recording of business transactions too. In that we have discussed, in three parts we have discussed about simple cash book, double column cash book or cash book with bank columns, then petty cash book. And the fourth one is here about other day books or other special journals. In the cash book, while studying cash book, which are the type of transactions entered in that? You have seen that sale of goods on cash or purchase of goods for cash, purchase of assets for cash, sale of assets for cash, payment of salary, receipt of commission, all such expenses, all such transactions are recorded. That means all cash transactions are recorded in cash books. Let us think about one of the transactions, purchase of goods for cash. We have recorded there. That is a special journal for recording that one. And what about some credit transactions? Today we are going to discuss about how to record and where to record the credit transactions. That is the topic here today. That's what purchase of goods for cash we have recorded in cash book. Then where can we record purchase of goods on credit? Can we record in cash book? Not at all, because it's a book prepared to record all cash transaction. So since this is not a cash transaction, purchase of goods on credit cannot be entered in cash book. There should be a separate book for that. That book is known as purchase day book. So what is a purchase day book? Purchase day book is a book which is prepared to record all credit purchase of goods. All credit purchase of goods. You have to completely say that it is prepared to record all credit purchase of goods. Only the goods. What are the other credit purchases? Credit purchase of assets also may be there. That cannot be entered here. Then where it can be entered? It can be entered on another book which is called journal proper. That we will explain later. Okay. So credit purchase of goods, credit purchase of assets can be recorded on another book that is called journal proper. That will be explained later. Now let us come back to purchase day book. Purchase day book is a book which is prepared to record all credit purchase of goods. Okay. Then see how to prepare a purchase day book. How to prepare a purchase day book. This is the format of a purchase day book. We can give the heading on top. Purchase day book. Sometimes it is called as purchase book also. Some business is called as purchase day book. Purchase book also. So here you can write the first column, date, then invoice number. We will explain what is an invoice number. Then name of the supplier. Then ledger folio. This is a journal, so we have to make the column for ledger page number. Then amount.
So this is the format of a purchase daybook,
where we will write first
the date, then invoice number. What is an invoice number? When you purchase some goods from a supplier, along with the goods, he will send an invoice. This is the source documents that you have purchased goods on credit. If you purchase goods on cash, if you purchase goods for cash, you will get what? A bill. A copy of the bill will be there. Okay? That means it shows that much money you have paid for the purchase of goods. But here it is not paid, it is purchased on credit. That means bill will not be there. What will be there? An invoice will be there. That means invoice is a statement which says that this much quantity of goods of this much quality, or sorry, this much price, this much quantity of goods of this much price each is sent to you on so and so date. Okay, that statement or that document is called the invoice number. Okay,
then name of the supplier. We will write
the name of the supplier from whom we purchase the goods.
Then ledger folio. That means in which page of the ledger his name is entered, his account is prepared. Okay, so let us solve a question here. For example, 2020 January 5, purchased from National Furniture, ten ceiling fan of ₹1,000 each. 1,000 each. Then 5 pedestal fan ₹2,000 each. So next, on January 8, purchased from Current Electronics, $20 tape recorder at the rate of ₹1,500 each. Then 10 or 100 CDs of ₹20 each. Here both they provided trade discount at the rate of 10%. Here also trade discount is there at the rate of 5%. Then January 10, bought from Royal Electronics, then electric tube of ₹100 each. 100 bulbs of ₹10 each. then 10 iron box of rupees 500 each. Then there GST was there, CGST at the rate of 10% and SGST at the rate of 10%. So this is the question. This we are going to enter in purchase check. First we can write, suppose here in all the cases invoice number is also there. Purchase from National Furniture, their invoice number 1001. Here invoice number 2005. Here invoice number 33421. So these are the cases. So first we can write 2020 January 5. 2020 January 5. Is it clear? So 2005 January 5. 2020 January 5. Purchased from National Furniture. So the name of the supplier is National Furniture. National Furniture, invoice number 1001. Amount. So in some of the books you can see there itself it will be written and will write the amount out column. We can write here separately. Let us write here. Calculate separately. You can make working notes if you want. You can make, and there you can write first the ceiling fan of rupees 1000 each. So ceiling fan, how much? 10 unit into 1000. That means 10,000. Then pedestal fan. Pedestal fan. How many? 2000 each. 5 pedestal fans of rupees 2000 each. So 5 into 2000, that also 10,000. So 2 items purchased. So total it is 20,000 less discount at the rate of 10%. Okay, so that can be written here 2,000 remaining 18,000. This can be shown here. If you want, it can be written here itself, otherwise can be shown separately. Okay, so here we will write 18,000. Then next transaction. What is the next transaction? January 8. Invoice number 2005. Supplier, name of the supplier, Current Electronics. Current Electronics. So what happens? 20 tape recorder purchased 1,500 each. So we can write tape recorder. How many? 20 into 1,500. That means 30,000. Then 100 CDs. 100 into 20. That means 2,000. 100 100 into 20. Then total 32,000 less discount. Trade discount only will be considered here. Cash discount will not be considered. Tax discount will not be there because cash was not given. Okay. So trade discount we have to deduct how much at 5%. So 1,800 is the trade discount. Balance 30,200. So current electronics will write 30,200. Then January 10, invoice number 33421, bought from Royal Electronics. Royal Electronics. Royal Electronics, how much? 10 electric tubes. We can calculate here. Tubes, how much? 10 into 1000. 10,000. Then 100 bulbs of bulbs, 100 into how much? 10. Okay, that means 1000. Then 10 iron box of 500 rupees each. So iron box 10 into 500, 5,000. So this is the total. Then 16,000. 16,000 is the total. CGST. GST is there. GST may be 12% or 8%, 18% like that. So here for convenience we made it as 10%. See, GST, if GST is there, that will be made into two parts, CGST and SGST. CGST means Central Goods and Services Tax. That will go to government, central government, and the state government will get SGST, State Government Goods and Services Tax. So, out of this 10% will go to central government and 10% will go to state government. So that is the case. So total 20%. So add CGST. How much? 1,600. Or we can show that in our model. I'm writing 1,600. Then SGST. Again 1,600. So 3,200, 19,200. So that can be written here, 19,200. Okay. And then if this is the only transaction, if this much transaction only is there in a month, we can total there itself. $67,400. So this is the total. Now let us see how to post that to the concerned ledger account. Here we are going to draw the ledger accounts. Ledger account we are drawing. First ledger account, national furniture. Then again 2-3 accounts are there. So our accounts are ready. We are going to post the journal entries to the concerned ledger accounts. See, national furniture. This is one of the supplier, isn't it? We know that if we purchase goods on credit, the journal entry is, what is the journal entry? Purchase debtor to supplier. Here the supplier is national furniture. Purchase account debtor to national furniture. So in national purchase account debtor to national furniture is the journal entry. So in national furniture account, what can be written? Yes, by purchase. When 2020 January 5 by purchase. How much? 18,000. That means the journal entry is purchase debtor to national furniture. Purchase debtor to national furniture. So in national furniture account, we will write by for purchase. So like that for current electronics, by purchase 2020 January 8 by purchase 30,200. For Royal Electronics also, we will write like that 2020 January 10 by purchase. How much? 19,200. Okay. So the suppliers accounts are over. We know that how to balance it. At the end of the month we can balance here. Here, then one more account is there, purchase account. What to post? In purchase account, we have to post the total of all the journal entries on a periodical basis. So in a month, suppose if it is in a month, we will write purchase account debtor to the total. Okay, so we can write journal entry on the debit side 2020. If it is January 31st, last date of the month, we will get the total. Suppose this is the total. Then what we will write? To sundries. Sundries means total. If you want, you can write sundries from purchase debit. How much? 67,400. So this is the way of posting from purchase debit. Okay. Now let us discuss about another day book, which is sales day book. Okay. Purchase day book is clear. Now we are going to discuss how to record all the credit sale of goods. Okay. Yes. Before discussing credit credit sale of goods, let us discuss one more topic in between. We have told that credit purchase of goods purchased on credit. If this goods purchased with returns to bank, suppose we have purchased some this ceiling fan, then pedestal fan, all those things we have purchased. Suppose some of the goods purchased are defective, what we will do? We will return back to the supplier. That is called purchase returns. Then if we want to record the purchase returns, what book can be prepared? There is a special journal for that. That is called returns outwards day book or purchase returns day book. Purchase returns day book. This is otherwise called returns outward debit or returns outward book. What is returns outward? Returns to out. Returns to out means returns to supplier. Okay, so that's why it is called the returns outward book. So let us write the format of purchase return day book here. First, as usual, we will write date column. Then here the source document. Source document is debit note. First date column, then debit note number. We will explain what is debit note number. Then name of the supplier. Then ledger folio amount. You can write the heading returns outward book. Now let us see what is a debit note. Debit note is a document which is prepared in duplicate and sent to the supplier that your account is debited with the goods which we are sending to you. Understood? Debit note is a document prepared in duplicate and sent a copy to the supplier stating that your account is debited with the value of goods returned to you. Supplier is a person to be credited. If we purchase goods, we will credit that amount in this account. He has to get. But if we return goods to him, how much is credited from that? That much amount will be, how much we are sending back, that much amount will be debited in this account. That means it will be decreased. That's why debit note is prepared. Debit note is prepared for purchase returns to debit the amount to be paid to, or to debit from the amount to be paid to supplier. Okay, this is the format. Now let us solve the question. Yes, the question is ready. Here 2020 March 4 returned to Rubam Textiles on debit note number 0095 10 sarees at the rate of rupees 2,000 each, then 50 shirts at the rate of 500 each. Okay, then trade discount 15%. Then March 20 returned to Lab Garments on debit note number 11010 100 shirt pieces at the rate of 100 each and 220 churidar set at the rate of 750 each and CGST and SGST. So how to calculate it? First we will write 2020 as we have written same day, March 4 in debit note number 0095. Name of the supplier Rubam Textiles. How much they will have to pay? So 10 sarees into 2000. That is the case of sarees. That means 20,000. Here 50 shirt pieces into 500. 25,000. So 45,000 in total. Then trade discount 15%. So less trade discount. Trade discount 10%. So 6,750. 6,750. So 0. 38,250. So that 38,250 we are writing here, and next transaction March 20. Debit note number 11010. Lal Garments. 100 chutneys, 100 into 100. 10,000. This is for shirt. Then churidar. 220 into 750. That means 15,000. Total 25,000. Add CGST 10%. So 2,500. SGST again 10%. 2,500. 5,000 will be deducted. 5,000 will be added. So 30,000 is the total amount. Let us total here 250 in 68,250. This is the total. Now you know that how to post the journal entries. Here you have to prepare 3 accounts. One for Rupam Textiles, then Lal Garments and purchase return account or returns outwards account. In Rupam Traders account, what to write? The journal entry is Rupam Traders account letter to purchase returns. So in Rupam Traders account we have to write to purchase returns. Okay. Then Lal Garments account we have to write again to purchase returns. And in purchase returns account, total we have to write by, it should be the credit side by sundries. Okay. So that's all. So this is regarding purchase return check. Now let us see about sales return check. Sales book, where we write all the credit sales. Okay. So sales day book. This is the book prepared to record, or this is the special journal prepared to record all the credit sale of goods. All the credit sale of goods. So this is the format. Sales day book, date column, then invoice number, name of the customer, you will write, not supplier, customer. Then ledger folio, amount. So this is the format where we will write name of the customer instead of supplier. That is the only difference of sales day book from purchase day book. Okay. So let us solve a question. So this is the question. On 2020 February 5 sold 2 release books. Invoice number is given. 10 bedtime stories at the rate of ₹70 each and 50 coloring books at the rate of ₹20 each and 100 page notebooks at the rate of ₹20 each. And trade discount is there. And another transaction sold to National Books. Invoice number is given. 100 children's story book of ₹100 each and 10 classic novels at the rate of ₹200 each and 20 short stories at the rate of ₹150 each. And trade discount is given 10% and CGST and SGST is given. So what? 2020 February 5. Invoice number 0010. Ravi's books. If place name is there, that also can be mentioned. See, bedtime stories, the first one. Bedtime stories. How many? 10 into 17, 7,000. Then coloring book. Coloring books 50 into 20,000. So total 8,000 less discount 5%. So that means 400. So 7,600 rupees. So this is the total. Ravi's books 7,600. On this date is not mentioned. February 15. So February 15. National Books Invoice Number 1000. National Books. Children's Story Book. Children's Story Book. How many? 100 into 100. 10,000. Then classic novels. Classic novels 10 into 200, 2,000. Then short stories 20 into 150, 3,000. So total 15,000 less trade discount. How much? 10%. That means 1,500. So what is remaining? 13,500 is remaining. Then add CGST at the rate of 5%. CGST 5%. So CGST 5%, 675. CGST will be calculated after deducting discount, because this is the amount to be paid to the supplier, or here we have to collect this much amount. So out of that, CGST should be added. Then SGST at the rate of 5%. That also is 675. That means total 1,350. 1,350 should be added to that. So 14,850 is the total. This 14,850 we can write here. So this is the base. Now let us total here. Total 22,450. So this can be posted to the ledger account in the same way which we have discussed first. Here we have to write again 3 accounts: Ravi's books, national books, and sales day books. So in the case of Ravi's book, what will be the journal entry? Ravi's books letter to sales. So in Ravi's book we have to write to sales. National books also we have to write to sales. And in sales book we have to write, that means sales account we have to write by sundries 22,450. Okay.
Is it clear?
That's all regarding sales daybook.
Now let us see what will be the or which is the book for entering credit sale of goods, return, credit sale of goods, return of credit sale of goods. Okay. Returns invoice book or sales return book. This is the book which is prepared to record all the returns of credit sales. Okay, returns of goods which are sold through credit sales. So how to prepare that? That's what we are going to see. The format is like this. Date column, then source documents. The source document here is credit note. Then next, name of the customer, then ledger folio amount. We will write sales return date. Okay, so this is the format. And credit note. What is credit note? This is the document which is prepared and sent to the customer, stating that we have received this much goods from you. Okay, and so we have credited this much amount from your account. So customer is our asset, or that is customers are our debtors are the assets. That will have a debit balance. Okay, and then from their account we credit this much amount of goods returned, because that much money they need not give to us because they have returned the goods. So that much money is debited. Sorry, that much money is credited or deducted. So in order to state that, we prepare and send a document to them that is called a credit note. Okay. Now let us solve the question. Yes. So this is the question. Two journal entries are there. 2020 June 4, returned by Weber Hardware through credit note number 705 to wash basin at the rate of rupees, or wash basin of rupees 250 each, and for hand shower at the rate of rupees 400 each. So we can write the entry here. 2020 June 4, 705 is the debit note number, and wash basin 2 into 250, so 500, then 4 into 400, 1600, 2100. No discount, nothing is there, so we can write here Weber Hardware $2,100. The next June 20 706 is the credit note number. Global Hardware so 5 garden taps of rupees 200 each, that means 1000. Then here 10 door handles at the rate of 300 each, so 3000, total 4000. That can be written here. So this is the condition. $6,100 in total. So how to post this?
Here we can post, this is sales returns. Okay, if there is sales, we will write customer's account after sales. Okay, this is sales return, so we will write sales return debtor to customer. So in customer's account, we can write by sales return. That means rubber hardware account we will write by sales return, and Global Hardware also we will write by sales return, and in sales return account we will write to Sunrise. That is the way of posting the entries of sales return day book. Okay. Now one topic is there, that is called what? Journal proper. Journal proper is the book which is prepared to record all other entries which cannot find a place in any of these special journals. That's what we have told one, that credit purchase of assets. Credit purchase of assets, then all the adjustment entries, all the outstanding entries, then all the rectification entries. All such entries can be recorded in a special journal which is called the journal. Examples: credit purchase of assets, then adjustment entries, rectifying entries, all those entries will be written in what? Journal. Okay, so these are all the special journals which are normally prepared by business organizations. I hope it is clear to you, because preparation of special journals are almost similar. Okay, so it is very easy to follow. Okay, I hope it is very clear to you. You can refer some reference problems, examples from your reference books, and can solve it. And if there is any doubt, don't hesitate to communicate that to me.